If gold is dead, why are central banks treating it like it's oxygen? If it's just a barbarous relic, as the economists love to say, then someone forgot to tell China, Russia, India, Singapore, and basically half the global monetary system, because right now, they're buying gold like the world's about to reset. And that's not an exaggeration. We are witnessing a global gold rush, not by retail investors, not by speculators, but by central banks. The very institutions that issue the currencies we all use. And here's the part that should make you sit up. They're buying gold at the fastest pace in over half a century. Yes, more than during the 2008 financial crisis. More than during the stagflation of the 1970s. Even more than during the peak of COVID. This is happening quietly, almost without media attention. But the implications are massive. So what's going on? Why is the world's most powerful financial class piling into the one asset they've spent decades downplaying? And what does it mean for your savings, your portfolio, and the future of money? Let's break this down. No fluff, just facts, and what they mean. Let's start with the numbers, because this isn't some theory or conspiracy. These are hard, verifiable facts from the World Gold Council, the IMF, and the central banks themselves. In 2022, central banks bought over 1,000 metric tons of gold. That's the highest amount since they started tracking global purchases in 1950. And 2023, just as aggressive. 2024, all signs point to another record. So who's behind this surge? First up, China. The People's Bank of China has been adding to its official gold reserves every single month. It's now among the top 5 gold holders in the world. And that's just the official number. Analysts believe China's actual holdings could be twice that, quietly stored in military or sovereign wealth reserves. Russia is in the same boat. After being cut off from the global SWIFT payment system due to sanctions, they went hard on gold, not just buying it, but developing gold-based settlement systems to bypass the dollar entirely. India, Turkey, Uzbekistan, Kazakhstan, all building up their gold reserves. Even countries you wouldn't expect, like Poland and Singapore, have been increasing their gold holdings by billions of dollars. This isn't random, this is a coordinated decoupling from the US dollar. And that should concern you, or at the very least, grab your attention. So why gold? Why not just hold other currencies or diversify into bonds? Because gold doesn't carry counterparty risk. It's not an IOU. It's not dependent on another country paying its debts. And it doesn't care who's in office, what rates are doing, or what Jerome Powell says at his next press conference. Gold is value in its purest form. That's why it's been money for 5,000 years. That's why it's held in vaults by every serious government on Earth. And that's why right now, central banks are rotating out of dollars and into gold like their lives depend on it. Now let's go a level deeper. What's really driving this? First, let's talk de-dollarization. The US dollar has been the global reserve currency since World War II, and for most of that time, it's been the most trusted. But in recent years, that trust has eroded, not because of economic performance necessarily, but because of politics. When countries like Russia, Iran, or Venezuela were cut off from the dollar system, it sent a message. The dollar isn't neutral, it can be weaponized, and for countries like China and India, who may one day fall out of favor with US foreign policy, that's a risk they're no longer willing to take. Gold, on the other hand, can't be sanctioned, it can't be frozen in a bank account, it doesn't require trust in a third party, it just sits there, quietly holding value. Exactly what you want in a world where alliances shift and global tensions are rising. Second, inflation and debt. The world is drowning in debt. In the US alone, we're adding $1 trillion in new debt every 100 days. Interest payments are now higher than defense spending. Europe's not much better. Japan is worse. And how do governments deal with unsustainable debt? Historically, one of two ways: default or inflation. They rarely default. Instead, they inflate the debt away. And what's the one asset that survives that process? Gold. It doesn't yield. It doesn't default. It doesn't rely on a central bank's promises. It just holds, like it has for centuries. Third reason, geopolitical risk. War in Europe, tensions in Taiwan, unstable governments in Africa, a shaky Middle East, trade wars, cyber attacks, pandemics, sanctions. The list is endless. We are in a more volatile, fragmented world than we've seen in decades. And in volatile times, capital moves toward safety. For central banks, that safety is gold. So, let me ask you, if these institutions with access to all the data are increasing their gold reserves, not just holding steady but accelerating their purchases, what are they preparing for? Because it's clearly not business as usual. Now here's the wild part. Despite all of this, the average investor is still asleep at the wheel. Your neighbor is buying meme stocks. Your cousin is trying to time the bottom of Bitcoin. Meanwhile, gold is quietly being hoarded by the most powerful monetary forces on the planet, and no one's sounding the alarm. Why isn't the media talking about this? Simple, there's no profit in gold for them. Wall Street can't collect management fees on gold bullion. They can't churn trades, sell you ETFs with leverage, or upsell you a hot new IPO when you're stacking coins. Gold is outside their system, and they don't like that. And yet, when crises hit, guess what the banks and brokers do? They buy gold. When inflation spikes, when currencies wobble, when trust breaks down, gold becomes the fallback. Not because it makes huge returns, but because it doesn't lose in a world full of risks. Now let's talk prices. Right now, gold is hovering in the $3,200, $3,300 range. But if this central bank buying continues, and there's no sign it's slowing, we're looking at a major supply and demand squeeze. Remember, gold is finite. Central banks aren't flipping their positions. They're taking gold off the market permanently. Every ounce they lock in a vault is an ounce that's no longer available to you, to me, or to any fund manager trying to play catch-up. That creates scarcity. And scarcity in the face of rising demand, that's not just bullish, that's explosive. $4,000 gold, conservative. $5,000, very realistic in the next leg up. $10,000? Call it crazy if you want. But in a world where fiat currencies are spiraling and central banks are already preparing for Plan B, it's not out of the question. So what should you be doing right now? First, get educated. If your financial planner doesn't understand gold, find one who does. If your portfolio has zero exposure to hard assets, ask yourself why. It's not about going all in, it's about being hedged. Second, think long-term. Gold is not a get-rich-quick asset. It's not supposed to double in a month. It's supposed to preserve wealth across decades. And if you're thinking about the next 10, 20, or 30 years, gold deserves a seat at the table. Third, follow the smart money. Watch what central banks do, not what they say. When they talk about inflation being transitory or tell you to stay in paper assets, that's fine. But when they move billions into physical gold, you better believe they see the writing on the wall. And lastly, stop waiting for permission. By the time gold is on every magazine cover, by the time CNBC is telling you to buy, by the time your Uber driver is talking about bullion, the move is already over. This is the time to pay attention. Not when it's trending, but before. Let's recap. Central banks around the world are buying gold at a record-breaking pace. They're doing it to reduce dollar risk, protect against inflation, guard against geopolitical chaos, and secure real value in a fake world. The public is largely unaware. The media is silent. Wall Street isn't incentivized to care. But you know now. So ask yourself, are you going to follow the crowd chasing digital fantasies? Or are you going to follow the smartest money in the room as it quietly exits paper and piles into metal? You decide, because this time, it's not about price, it's about positioning. And the next big shift is already underway. Stay sharp, stack smart, and don't say nobody warned you.